Hello and welcome to our weekly look ahead at the markets here. And well, it's been an interesting week that we've had over the last 5 sessions. Last week saw risk just come off the boil a touch. The previous Friday we'd seen the S&P 500 and the Dow hit record highs. They closed at record highs on that weekly close. That was a big move, but subsequently a bit of selling creeping in. We did get a bit of a bounce back in the middle of the week, but then by Thursday stocks came off again on news about Joe Biden's, or rumours really, about Joe Biden's plans to hike capital gains tax, almost doubling it for the wealthy. That's been a factor. That capital gains tax might be part of the reason that we saw Bitcoin fall quite dramatically last week. It hit a record high on that Coinbase IPO, but subsequently dropping quite sharply over the weekend, and then coming off about 25%, trading around $47,000 by Friday. So we look to see whether there's any kind of impetus to buy that dip on Bitcoin. Of course, that has implications for the likes of ARK, the innovation ETF, which owns a lot of Coinbase, Tesla, which owns a lot of Bitcoin, and other stocks like MicroStrategy, which was hit quite badly on the Thursday due to the fall in crypto assets. So the crypto space is an interesting one. Obviously, you are not able to trade any of these derivatives of cryptos here in the UK, but elsewhere it is possible. But the likes of Coinbase offer exposure as well. We've seen a bit of a rethink maybe around rates. US 10-year yield dropping back down to a sort of 1.55% range to 1.6%. It had been trading closer to 1.7% a couple of weeks back. So just a little bit of softness in that bond yield. So a bit of bid coming back in for bonds really as risk appetite just declined slightly last week. As I said, we saw gold move higher. The decline in yields and a declining dollar has been positive for gold, moving back to test that 1800 level. So we look to see whether or not that move is going to be carried forward. We extend out of the recent downward trend. We've got a very clear channel that we've been trading in. We're at the top of that channel, just breaking out to the upside of that, and look to see whether or not we can start to take out some of the old areas of support again to the upside. So lots going on and lots to look forward to this week. Earnings season continues at plenty. We've got Tesla at the top of the bill on Monday. Lots to look out for there. Record Q1 deliveries that they reported a couple of weeks back that are in focus. But as ever with Tesla, the valuations are a problem. Now, the stock has been on a bit of a wild ride this year, declining rapidly off that level from February when Elon Musk first revealed that they'd taken a big stake in Bitcoin, but it has bounced, so up about 30% off the lows over the last month. So Tesla reporting earnings Monday, and then we've got the big tech stocks to look out for: Apple, Facebook, Alphabet, Microsoft, so on. So keep your eyes open for those earnings releases. There's usually a lot of volatility around the results, and I think you do need to be careful as we get into this sort of pattern of value and growth rotation. Is there a concern that some of these richly valued growth stocks are more exposed to weaker earnings numbers than they maybe ought to be? We saw Netflix decline 10% off after its Q1 report. Now, I didn't think it was that bad a report, but the market didn't like the overall picture in terms of the number of net subscriber ads. We had 4 million net ads against 6 million that had been expected. They guided for just 1 million net ads in the second quarter, and the market decided that that wasn't good enough. However, revenues were up handsomely, up about a quarter from last year, and I think there are reasons to be more optimistic than that 10% decline on the day would indicate. So keep your eyes open on those tech stocks. They could be volatile if you've got positions in them right now. Do check the latest information and earnings outlooks and see where you're at with those. We also have the FOMC coming up this week. The ECB was last week, bit of a non-event. Christine Lagarde managed to keep things calm and didn't allow bond yields to do much during her press conference. and the market seems fairly happy that the ECB is on track really with what it wants to do. It's not surprising anyone too much. The economic data from Europe last week was pretty solid. The PMIs on Friday were very solid, particularly in France, where we saw the services PMI go back into expansionary territory. It had been expected to show a decline. So the economy in Europe is holding up quite well. They're on course to vaccinate 70% of adults by July. So the EU vaccination story is really starting to improve. They have also secured 1.8 billion doses of the Pfizer vaccine. So that story in Europe, I think things are looking better. I think that would be good news for the euro. I think the ECB is also minded to come out of emergency mode, if you like, a lot quicker than the Fed is right now. I think the Fed has a bit of a policy angle that it's taking, which is beyond a simple inflation target. It's looking at employment, looking at the type of people who are employed, and it's starting to fall into a slightly political frame of mind, and it's very cozy, I think, with the Biden regime, and I think it's going to be playing the tune of the Biden regime in trying to stimulate growth in terms of jobs and getting more people into jobs, and that means keeping monetary policy very loose for very long time and allowing inflation to take hold. We have seen inflationary pressures start to take hold. PMIs, again, last week indicated some degree of inflationary pressures picking up, and I wouldn't be surprised to see that start to creep in as well. But we wait to see what the Fed actually says on Wednesday. Do inflation pressures start to become a factor? Are policymakers worried about that? Is Jay Powell worried about that? Probably not. I think we know where he is with this, and I think he'll be sticking to the script. So I don't expect any major changes from the Fed next week. And that's really, those are the main events. We also have the OPEC meeting. That monthly meeting is not going to be a big deal because the last meeting they decided to outline their supply plans all the way through to July. So not really any need for any significant update from OPEC next week. So keep your eyes open and do tune in here on X-Ray, and we'll keep you posted throughout the week with all the latest updates. Thanks for watching.